Hello my friends, today we are starting with CARO 2020. What is CARO? Companies Auditors Report Order 2020. We had something called as CARO 2016, we have a recent amendment, we have a new CARO which is CARO 2020. I am Professor Rohit Shroff and I'll be teaching you CARO 2020 in this video. I request my friends, please take down your notes along with the lecture. Please don't view the whole lecture and then go through it again to write the notes. Please write whatever is in red ink in red, whatever is in blue ink in blue. So the prerequisite before starting the lecture is a notebook, a red pen and a blue pen. Please my friends, turn off all your social media notifications. I am Professor Rohit Shroff and not Tiger Shroff. I do not have Disha Patni. I might not be as entertaining as them. There might be, you might get a message on Snapchat from someone. I might not be able to grab your attention. So please, I request, turn off all your social media notifications and give me undivided attention. Let's go ahead, my friends. CARO 2020. Like I said, what is CARO 2020? It is Companies Auditors Report Order. However, we can call it as CARO only. It is a valid short form and wherever we use it, we are going to use the term CARO. We need not write the full form Companies Auditors Report Order. It is just so that you all know what exactly is this. Now, we have understood, sir, what is the full form of CARO, but what exactly is CARO? See, what happens is we have financial statement. Based on those financial statement, what do we give? Our audit report. As an annexure to our audit report, we give CARO. CARO contains 21 points. CARO 2020 consists of how many points? 20 points on which additional reporting is required from the end of the auditor. The financial statement will talk about fixed assets. Users of the financial statement will be able to see what is the gross block, additions during the year, the depreciation, the net block. But however, if the user is keen to know, auditor, whether have you conducted physical verification? Is it specified in the audit report? No. The user is somewhere keen to know whether the physical quantities have been maintained by the client. The user is somewhere keen to know whether there was any revaluation in the asset or whether the company is holding any Benami property. Tell me, or are all these things available in the financial statements or the audit report? No, but somewhere user is keen to know all those things. So all this additional reporting comes into picture in CARO. Okay, so that is basically what CARO is, but we'll see what are the 21 points of reporting. So okay, sir, we understand CARO. So probably we understand something. CARO is not required only for one company, it is required for every company because every user will be keen. Correct. So CARO is applicable to all companies, whether it is a domestic company or whether it is a foreign company, because every user will be keen to know something more about this 21 points. So CARO is applicable to all the companies. Sir, anyone is excluded? Yes, BIPS is excluded. Who is excluded? BIPS. Bipasha Vasu? No. Who is excluded? B. A banking company. Who is excluded? A banking company. Why is a banking company excluded? Because banking company already has something called as LFAR, long form audit report. Something called as long form audit report, which we have already covered in a banking audit chapter. So there are already a lot of disclosures in LFAR. Hence a banking company does not require reporting under CARO. I. Insurance company. P. Private limited company. But sir, are all the private limited companies excluded? No. If they satisfy the following three conditions cumulatively, that is, their paid up share capital and reserves is less than or equal to 1 crore. Please see, we are talking about paid up share capital plus reserves. It should be less than or equal to 1 crore. And, I'm stressing on the word and, loans is less than or equal to 1 crore. And revenue, that is my turnover, is less than or equal to 10 crores. See, all these are and condition, that is cumulative conditions. We need to fulfill all the three, only then we will be excluded from CARO reporting. Even if one of the above is not fulfilled, CARO will be applicable. For instance, let us assume My paid up share capital and reserves is 80 lakh rupees. I fulfill the criteria. CARO is not applicable. My loans, that is borrowing from financial institution or banks or any person, let us assume is 70 lakh rupees. Again, I fulfill the criteria. CARO is not applicable. Revenue, my revenue is 9 crore. Am I satisfying the conditions? Yes, all the three conditions, hence CARO is not applicable. Let's take one more example. My paid up share capital is 80 lakhs. My loans again is 70 lakhs. But however, my revenue is 11 crore. It has exceeded 10 crores. So I have not fulfilled the third criteria. Now CARO is applicable to me. I am not excluded. So all these are and conditions, not or conditions. Cumulative. We have to satisfy all the three. Only then a private limited company will be excluded. So from B, what did we see? Banking company. I, insurance. P, private limited company, provided three conditions are fulfilled. Paid up share capital plus reserves. I am again stressing on the word reserves, because in a lot of things where we have studied the criteria, it only specifies paid up share capital. But here they are also considering reserves. So paid up share capital plus reserve is less than or equal to 1 crore. And loans is less than or equal to 1 crore. And revenue is less than or equal to 10 crore. Finally, last, S. Section 8 company. Section 8 company, you all already know, dealing with trusts and all. Smaller company and one person company are also excluded from CARO reporting. So BIPS is excluded from CARO reporting. So what did we see so far? What is CARO? It is applicable to all companies including foreign companies, and it is excluded to BIPS. Okay. So sir, what did we see in case of private limited company? We understood. But once if CARO is applicable, do we need to comply with CARO reporting every financial year? No. We need to check the status of the company on every balance sheet date. So for example, on 31st of March, let us assume 31st of March 2020. For example, my turnover was greater than 11 crores. CARO was applicable. So I will make for this financial year. But in a case on 31st of March 21, if my turnover is less than 10 crores and all the three conditions have been cumulatively fulfilled, then a CARO will not be applicable for the next financial year. So we need to check the status of the company every balance sheet date. Okay. So if it is applicable to holding company, it shall apply to subsidiary as well. Yes. For example, H Limited is a holding company which is a listed company. S Limited, S is a private limited company complying all the three conditions, that is paid up share capital plus reserves is less than or equal to 1 crore. Borrowings, that is loan, is less than or equal to 1 crore. And revenue is less than or equal to 10 crore. So S Limited is excluded. But now, however, H Limited, which is the holding company, is a listed company. Listed company is nowhere excluded. So CARO is applicable to holding company. Then in that scenario, it shall also apply to S Limited. Even though S Limited is a private limited company complying with all the three conditions, it will be applicable to S Private Limited, since H, the holding company, is a listed company. So if it is applicable to holding company, it shall also apply to the subsidiary. So then likewise, it shall apply to consolidated financial statement. I hope we all know what is consolidated financial statement. For example, X Limited and Y Limited is the subsidiary. X Limited will have its own financial statement. X Limited will have its own audit report. Likewise, X Limited will have its own CARO. Likewise, in Y Limited, they will have their own financial statements. They will have their own audit report and they will have their own CARO. So sir, then in case of consolidated, we will have CFS, okay, where both the financial statements are together. We will have consolidated audit report, like we had consolidated financial statement, we will have consolidated audit report. Sir, likewise, we will have consolidated CARO. No, there is nothing called as consolidated CARO. In case users are keen to know about the fixed assets of X, they will read the CARO of X Limited. If users are keen to know fixed assets of Y, they will read the CARO of Y Limited. There is nothing called as consolidated CARO. But however, as per the new provisions of CARO 2020. However, as per the new provisions of CARO 2020, if there is an adverse remark in CARO of a subsidiary, so for example, here Y Limited CARO has a adverse or a qualified remark, then CARO of the holding company, shall indicate a reference to that particular point. So CARO of X Limited will also talk about CARO of Y Limited for that particular point which there is a qualification or adverse remark. So this is a new provision, my friends, as per CARO 2020. The order shall not apply to CFS except in clause 21. The auditors of holding company shall also be indicative of the companies included in the consolidated financial statement whose CARO report contains qualification or adverse remark. So in case if there are no qualification or adverse remark, then we did not indicate the same. However, if there are qualification or adverse remark, we should indicate the same in the CARO of the holding company. So this was a new point. So wherever you see this bulb, Mentos ki batti, you need to know this is a new provision of CARO 2020. So students who are appearing for the first attempt, there is no distinguish going to be asked between CARO 16 and CARO 20. I will be highlighting the new provision throughout the video, but no distinguish is going to come. This is mainly for the students who have already studied CARO 16, so they can understand what are the changes. Also, the new provisions are like, highlighted points are something on which questions are more likely to come. So you all need to know those changes. You all need to focus on those things. So there is a high probability that questions will be asked from those new provisions. Okay, going ahead. So we have understood so far what is CARO, applicable to whom, excluded, then status to be checked on the balance sheet date, if applicable to holding, applicable to subsidiary, and what do we need to do in CFS. So far whatever we have covered, let us take few examples from the past questions. The past questions which I am taking are from past examination, RTPs, mock test. None of the questions are framed from my end. So these are all past questions. Let us just go through it. As an auditor, how would you deal with the following? L Private Limited, which has an outstanding borrowing of more than 100 lakhs from financial institutions, defaulted in a repayment to the extent of 50%. The company holds that it being a private limited company, the CARO is not applicable. They have a borrowing of 100 lakh, which is 1 crore. If you remember private limited, there were three things. Paid up share capital plus reserve should be less than or equal to 1 crore, and borrowing should less than or equal to 1 crore, and turnover, that is revenue, should be less than or equal to 10 crore. In this scenario, we already have borrowing of 100 lakhs, which is 1 crore. So are we satisfying? No. So we are not excluded from CARO. We will require CARO reporting. So let us check the answer. Contention of private limited is not correct, as borrowing from the financial institution exceeds 1 crore. Okay. At the same time, there is non-repayment. There is some problem in the repayment of the loan. We need to report the same, but that we will cover when we go to the clauses. And the auditor is required to report the period and amount of default in repayment of dues under CARO. What we will cover when we go to other points. Let's take one more example. A private limited company reports the following position on 31st of March 2019. The paid up capital is 60 lakhs. Revaluation reserves is 20 lakhs. Capital reserves is 22 lakhs. P&L debit balance is 4 lakhs. The management of the company contends that CARO is not applicable to it. Let us revise the condition. Paid up share capital plus reserve should be less than or equal to 1 crore, and borrowing should be less than or equal to 1 crore, and turnover should be less than or equal to 10 crore. So now here we are given information only about paid up share capital and reserves. So let us check on basis of that. Paid up share capital plus reserves. Paid up share capital is 60 plus reserves, capital reserves, revaluation reserves is 20 plus capital reserves is 22. P&L account, a debit balance. It is debit balance and not credit balance, so it will be subtracted. So let us see the total. 60 plus 20, 80, 80 plus 22, 102, 102 minus 4, 98. So are we less than 1 crore? Yes. So are we satisfying the condition? Yes. So is CARO applicable? No. We are excluded. So somewhere the most important part here was debit balance. In case if you don't subtract this and end up adding it, so somewhere you will end up stating that CARO is applicable. So let us check the answer. CARO is not applicable as the paid up capital in reserve does not exceed 1 crore. How much is it? 98 lakh, which is less than 1 crore. Let us take one more example. Under CARO 2020, how as a statutory auditor would you comment on the following? X Private Limited is a subsidiary of a listed entity. The management of the company believes that X Private Limited is a private limited company and satisfy all conditions under CARO. Reporting under CARO is not applicable. So what they are trying to say is, see, X is a private limited company, satisfy all the conditions, that is the paid up share capital and reserves is less than 1 crores, borrowings is less than 1 crores, and a turnover is less than 10 crore. It might get annoying, I am repeating the same thing again and again, but then most frequently asked question, so you need to remember this limit. So repeat it again and again with me, don't get annoyed. So now somewhere CARO is not applicable because private limited company, they have complied with all the condition. But however, it is a subsidiary of a company which is a listed company, is a subsidiary of a listed entity. So holding is a listed entity, subsidiary is a private limited entity. I hope you have something nostalgic. We just talked about it. Okay, in case if you are a subsidiary of a holding company, and which holding, if it is applicable to holding company, it shall also apply to subsidiary. So in this case, holding is a listed company, it is applicable to holding company, hence it will apply to subsidiary as well, even though you have met all the criteria of private limited company. CARO is applicable as extension is not available to a private company which is a subsidiary or holding of a public company. Okay, so I hope the things that we have discussed so far are clear. Let us go ahead with the main part of CARO, that is clause reporting, which are 21 clauses, starting with the first clause, property, plant, equipment and intangible asset. Property, plant, equipment and intangible asset. This was previously called as fixed asset clause. This was previously in CARO 2016 was called as fixed asset. But now, however, they have renamed it as property, plant, equipment and intangible asset. There was no mention about intangible asset, but now, however, they have mentioned the same. So in case of fixed asset, they want us to report on 5 things. How many things? 5 things. Firstly, they want to know whether quantitative details are maintained. What? Whether the quantitative details are maintained. Quantitative details of what? Property, plant, equipment and intangible assets. So they are keen on knowing property, plants, quantitative details of property, plant and equipment and as well as intangible asset. Here in the case of intangible asset, CARO 16 was silent. Somewhere CARO 2020 is also asking us to report on intangible assets. So this is a new provision. Okay, this was point 1 of clause A. In clause 1, physical verifications are conducted at regular intervals. So now what they want to know is whether the physical verification is conducted at regular intervals. So if there is a fixed asset, let us assume there is an end conditioner, I will go and verify it physically. To obtain audit evidence, I will go and conduct a physical verification. So we need to report whether physical verification is conducted at regular intervals, and if any discrepancies, whether the same have been dealt with. So whether we found any discrepancies during physical verification, and if yes, whether the same have been dealt with. Okay, this is the same point as per CARO 16. Going ahead, deeds of immovable property are in the names of the company. What do we want to know? Either the immovable property, whether the deeds are in the name of the company. It is not held in the name of director or promoter or anyone. Now we need to report the same in the prescribed format. Earlier we just needed to mention whether the deed are in the name of the deed of immovable property are in the name of the company. But however, now we need to give the same in the prescribed format. So this is as per CARO 2020. 16 never gave us a prescribed format. Now what is the prescribed format? We need to give a description of the property. We need to mention the gross carrying value. We need to say whether it is held in the name of promoter, director or relative or employee of the company. Period held indicate range where appropriate, and reasons for not being held in the name of the company. You might have some reasons why you're not holding in the name of the company, so you need to state the same as well. So now we need to give this reporting under this particular format. Okay, next, whether there is a revaluation in the plant, property, equipment or intangible assets. What are they asking? Whether there is any revaluation, and if there is a revaluation, whether the revaluation has been done by a registered revaluer. Whether the revaluation has been done by a registered revaluer. So first we need to check whether there is any revaluation in context of property, plant, equipment or intangible asset. If yes, we need to check whether the same has been done by a registered valuer. And again, if yes, and if the revaluation amount is greater than 10%, if the revaluation is greater than 10%, now we need to report the amount as well. That is the amount of change. The amount of change if it is greater than 10%. So if the revaluation is greater than, let's assume for 2% or 5%, we need not report the amount. But however, if the revaluation amount is greater, if the revaluation is greater than 10%, in that scenario we need to specify the amount. So again, this is a new point as per CARO 2020. There was no such point for revaluation. Last point, whether any proceedings are initiated or pending for holding a Benami property. Whether there are any pending proceedings for a company who is holding a Benami property, that is a company which is not held in the name of the company. If yes, whether the same have been adequately disclosed in the financial statement. Whether the same has been adequately disclosed in financial statement. Again, a new point as per CARO 2020. So far what did we see in this particular clause? What are we supposed to report? Whether the quantitative details are maintained for property, plant, equipment as well as the intangible assets. Then whether physical verification is conducted at regular intervals, and if any discrepancies, the same have been dealt with or not. Whether the deeds of immovable property are held in the name of the company, and the same we need to give in the prescribed format. Whether there is any revaluation of property, plant, equipment or intangible asset. If yes, whether the revaluation is done by a registered valuer. We just want to know it is not done arbitrarily by the management. And if so, and if the change is greater than 10%, we need to report the amount of change. Last, if there are any pending proceedings initiated against the company for holding a Benami property, whether the same have been disclosed in the financial statements. So if you see in this one clause itself, the name has changed, intangible assets has been included, prescribed format has been given 3, revaluation has been talked about 4, and Benami property has been talked about 5. There are 5 new changes in CARO 2020 in case of property, plant, equipment and intangible assets. So that was clause 1. Let us move ahead. Clause 2, inventory. In case of inventory also, they are keen to know whether physical verification has been conducted and if there is any discrepancy. But now in a case of discrepancy, if they say if the discrepancy is greater than 10%, what if the discrepancy is greater than 10%, then whether the discrepancies are dealt with. So now they are not keen on reporting discrepancies which are less than 10%. So somewhere they have set a materiality level. Okay, in case the discrepancy is greater than 10%, whether the same have been dealt with, only then you report in CARO. So what are we doing here? Physical verification. If the discrepancy is greater than 10%, we need to report whether they have been dealt with. Now there is one more additional point which has come up with a very new point in CARO 2020. What are they trying to tell us? In a case if you have obtained a working capital limit, if you have a sanction for a working capital limit, and if the same is for above 5 crores in aggregate. If the same is above 5 crores in aggregate. What do you mean by aggregate? For example, you have obtained 3 crores working capital limit from Axis Bank. You have obtained, for example, 3 crores working capital limit from Muthan Finance. So from a bank or financial institution in aggregate. So 3 crores meant 6 crore. So if in aggregate it is greater than 5 crores, then you need to verify This is again a new point as per CARO 2020. Then you need to see whether quarterly returns or statements are filed. See, whenever we obtain a working capital loan, I hope you understand working capital loan. So we mortgage a stock. So we are supposed to give the report on stock. What is the value of the stock and what is the quantity of stock that we are holding. So if I have a stock of let's say 10 crores, on basis of that bank has granted me working capital limit of let's say 5 crores. In any scenario, in any particular month or any particular quarter, if my stock limits goes below 10 crores, then somewhere bank might reduce my working capital limits. Hence we are supposed to file regularly the returns. So we need to see whether the quality returns are filed. Not just that, we are also supposed to report whether they are in agreement with the books of accounts. So we have somewhere stated to the bank we have stock of 10 crores, but we need to verify whether they are in agreement with the books of accounts. We have not inflated or we have not deflated. So this is a very new provision where we need to report upon. So in a case of inventory, we saw two things. Firstly, they want to see whether physical verification is conducted. And if any discrepancies, that is discrepancy of greater than 10% are noticed, whether the same have been dealt with. Secondly, they want to know if there are any working capital limits greater than 5 crores in aggregate from banks or financial institution. If yes, whether the quarterly returns are filed and whether the same are in accordance with the books of accounts. Okay, so now in a case if the working capital limits is less than 5 crores, so let's say for 2 crores, then this reporting is not required. It should be greater than 5 crores. Okay, so this was inventory. Let us move ahead to clause number 3. Investment guarantee security and loan granted by company. So what are we talking about? Where we have granted loans, we have made investments. So we are talking about our assets. We have granted loans and securities. We have not borrowed money. We have granted loans and advances to other. So there are 6 particular things that they want to know in this particular clause. What is the first thing? Whether the company has provided any loans, guarantees, or provided any security to any other entity. See, this is not applicable to companies whose principal business is to give loan. So in case if there is an NBFC whose main principal business is accepting deposits and granting loans, okay, accepting loans, granting loans, so in that particular scenario this clause is not applicable because their prime business is this is applicable to other entities. So we need to report whether the company has granted any loans or provided any security to any other entity. In that also they need 2 bifurcations. They somewhere want to know aggregate amount of loans given to subsidiary, joint venture and associates. This is nothing but group companies. This is nothing but group companies. So they want to know out of the total loans and advances, how much loan you have given to the group companies, and aggregate amount given to other parties, and aggregate amount given to other parties. So if firstly they want to know whether we are given any loans, advances or provided any security. If yes, they want a bifurcation, how much loans, advances and security have been given to group companies, that is subsidiary, joint ventures and associates, and to other entities, that is companies, entities other than the group companies. Secondly, they want to know whether the terms and conditions are not prejudicial to the interest of the company. What are they keen on knowing? Whether the terms and conditions are not prejudicial to the interest of the company. So for example, if I give a loan, I get 10% return as of now. For example, I'm saying. Now I have given a loan to a party who's paying me only 5%. Who's paying only 5%. He's a friend of our director. He's a friend of our director. So somewhere this terms and condition are prejudicial to the interest of the company. Company is making a loss of 5%. Had the money been given to someone else, we would have earned 5% extra. So this terms and conditions are prejudicial, are not in the interest of the company. So we need to check whether the terms and conditions are prejudicial. Let's take one more example. Had I given a loan of 2 crores, I would have asked the party to give me a security of at least 2 crores. So, he would mortgage his house or anything, so he would give me a mortgage of 2 crores, at least a security of 2 crores. But now director has given a loan to his friend for which no security has been received. We have given him 2 crores. He's paying us 10% at par with what others are paying. But no security has been received. Now in case if his friend defaults, the company will be at loss. So again the terms and conditions are prejudicial to the interest of the company. So we as auditor need to report whether the terms and conditions are prejudicial or not. Next, whether the repayment of interest and principal is regular. So when we have granted loans and advances, we are supposed to evaluate whether the party is paying us interest and principal at regular intervals. In a case, if the amount is overdue for 90 days, in case the amount is overdue for 90 days, that is on an average 3 months, any steps for recovery have been taken. So in case a party is not paying us since 90 days, will we say, okay, no, he will pay? No, right? We need to take steps for recovery. वसूली करनी पड़ेगी. So we need to take steps for recovery. So if it is overdue for 90 days, we need to evaluate whether any steps for recovery have been taken or not. Going ahead, whether the loans and advances has fallen due during the year, has been renewed or extended, or fresh loans are granted to settle the overdues of the existing loans. So what are we trying to say? The loan has fallen due. That is the party needs to repay in this financial year. But we have renewed their loans, or we have extended their loans. Do not repay in this financial year, repay in the next coming financial year, or maybe after 2 financial years. Or what we have done is we have granted them a fresh loan. So they were supposed to pay us 2 crores and an interest, let us say, of 20 lakhs. We granted them a new loan of 2 crore 50 lakhs by which they repaid their earlier loan. So in a way, they still have a loan of 2.5 crores. They have repaid the earlier loan, but they have paid with our money only. We have granted them a new loan. So in all the 3 scenarios, there is an indication that the opposite party is unable to meet its obligation. He is unable to repay our loans on time. So somewhere there is a risk of NPA. There is a risk of NPA. I hope you all know what is NPA? Non-performing asset. Why do we call it as non-performing asset? See, asset, when put to use, he should earn money for us. So if there is a fixed deposit, we'll say fixed deposit, you need to earn interest for me. Now I have granted a loan to someone and that loan is not earning interest for me. So I will say this loan is non-performing asset because it is not earning interest for me. So in this scenario, there is an indication. See, we are not saying completely the loans are NPA, but there is an indication that loan might turn into NPA, that is a non-performing asset, because we are renewing. The opposite party is unable to meet its obligation. So we are trying to report on the same. So now what are we supposed to report there exactly? See, this is a new point, okay? So somewhere the users know in advance, are we going to incur any losses? What are we supposed to report there? Percentage of the aggregate of total loans or advances. So for example, total loans and advances granted by the company are 20 crores. 100 crores. Out of 100 crores, 20 crore loans are renewed. 20 crore loans are renewed or extended, or fresh loans have been granted. We need to give percentage of the aggregate. So how will we find percentage? 20 or by 100 into 100. So it is nothing but 20%. So out of the total loan, 20% are such loans which have been either renewed, extended, or fresh loans have been granted for repaying the same. Okay, so we need to disclose the percentage of the total aggregate of loans and advances. Lastly, if the loans are granted in nature of loans either repayable on demand or without specifying the terms of period. So we have granted a loan to someone and we say whenever we ask for, you need to return the money. That is repayable on demand. Or we have granted someone the loan and no period has been specified. What? No period has been specified. So in that particular scenario, we need to specify the aggregate amount. What do we need to specify? The aggregate amount. How much loans are given which are repayable on demand or on which the period or time is not specified. Not just this, we also need to give percentage of total loans to promoters and related party. So like again, total loans are 100 crores. Loan to related party is, for example, 5 crores. We need to give percentage of total loans to promoters. So in this case, 5% of the total loans are given to promoters and related party. Usually when we give loan to promoters and related party, it is repayable in demand, or we do not specify the terms or period of repayment. So we need to give percentage of such loans. Okay, so what did we study so far in this particular clause? 6 things. Firstly, whether we have granted any loans. If yes, we need to give a bifurcation. How much amount has been given to group companies, that is subsidiaries, joint ventures and associates. How much amount is given to other parties. Secondly, whether the terms and conditions are prejudicial to the interest of the company. Thirdly, if there is a regular repayment of interest and loans from the opposite party. Fourth, if it is overdue for greater than 90 days, whether steps for recovery have been taken or not. Fifth, if the loans has fallen due during the year, but we have either renewed it or extended it, or we have granted fresh loans, then we need to disclose the percentage of aggregate to the loans or advances. Lastly, if the loans are granted in the nature of repayable on demand, or whether the specified terms or period is not mentioned, we need to specify the amount of such loan, and also a percentage of total loans to the amount granted to the promoters and the related parties. So this was all about investment guarantee, security and loans granted by the company. Everywhere you see a bulb is a new provision as per CARO 2020. Going ahead, clause 4. Compliance with section 185 and 186. This is again the same reporting as per CARO 16. What does 185 talk about? When a loans and advances has been given to directors. So in case the loans and advances are given to director, we need to see whether section 185 has been complied with. And 186 deals with investments of the company. Investment and loans and advances of the company. So we need to check whether 185 and 186 have been complied with. So these are the same provision as per CARO 2016. Very rarely questions have been asked on this. Moving ahead. Public deposits. So CARO 16 only used to say public deposits. CARO 2020 says including public deemed deposits. So this is a new thing which says by deemed deposits are also included in public deposits. Now what is public deposits? In case I have 1 lakh rupees, I kept the same in Axis Bank, I get a return of 7%. I will say this is a fixed deposit for me, and so will Axis Bank say Rohit Shroff have kept a fixed deposit with Axis Bank. But in case if I keep this 1 lakh rupees with Future Group, I hope you all know Future Group, owner of Big Bazaar, Pantaloons. So I keep this 1 lakh rupees with Future Group, and Future Group is giving me a return of, let's say, 10%. So I will as an investor say I have kept a fixed deposit with Future Group. But now Future Group cannot say this is a fixed deposit that they have obtained from Rohit Shroff. For them, since they are not a banking company, they have said this is a public deposit. In a way, they have taken a loan from me. In a way, Future Group has taken a loan from me of rupees 1 lakh, and on which they are liable to pay me interest. So this is called as public deposit. So in case if you are a banking company and if you accept deposit, it will be termed as fixed deposit. But if you are not a banking corporation and if you have accepted deposits from the public, it will be called as public deposits. Okay. So in this scenario, we need to verify 3 things and report on 3 things. Whether directives of RBI have been complied with. See, RBI somewhere very closely monitors public deposits, because people in faith will give this money to the bank, to the corporations. So this is a non-banking corporation, Future Group, where I have given my money. In case if they do not repay me the interest or do not repay my the whole amount, the investors will be at loss. So RBI monitors the same very closely. So a lot of time RBI issues the directives on the same. So we need to verify whether the directives have been complied with, whether the provision of the Companies Act have been complied with, and wherever there have been orders from the CLB, that is Company Law Board, or the Tribunal, whether the same have been complied with. So in case of public deposit, we need to report 3 things. Directives of RBI have been complied with, provision of the Companies Act been complied with, and orders if any of CLB or the Tribunal have been complied with. So the new point was that the public deposit also includes deemed deposits. Let's go ahead. Cost records are maintained as per section 148. We have already covered section 148. So section 148, whether the cost records are maintained. So you are not talking about cost audit. We are talking about cost records where our overall turnover is greater than or equal to 35 crores of regulated and unregulated. Then we need to maintain cost records. So we are just supposed to report here whether the cost records as required under section 148 have been maintained or not. That's it. Clause 7, statutory dues. Now this is a new point where this have specifically stated GST including when we are talking about statutory dues. What is statutory dues? Any dues like taxes or anything which is payable to the government, and if you have not paid, it is called as statutory dues. So now it is specifically saying including GST. Why? See, CARO came in 2016. However, GST became applicable from 2017. Hence in CARO 16 there was no mention of GST. But now since GST is into picture, so CARO 2020 specifically states statutory due includes GST, which was not mentioned in CARO 2016. So now in this we need to report on two things. Firstly, we need to verify whether it is disputed or undisputed. So for, let's say, income tax department tells us your tax liability is 2 crores and we agree. There is no dispute between us and the income tax authorities. There is no dispute. We are supposed to pay that. We agree that yes, that is our liability. So whether it is disputed or undisputed. So we agree, undisputed. But now we say no. We do not agree, we disagree. We will appeal against your order. What? We will appeal against your order. So that means we are in dispute. So in case of statutory dues, we need to verify whether it is disputed or whether it is undisputed. If it is undisputed and if it is outstanding for greater than 6 months, then we need to report on the same. So for example, income tax department tells us you are supposed to pay 2 crore as your tax liability. Undisputed, we agree with the same. But however, we have not paid the same since 6 months, then we need to report. But if it is less than 6 months, so income tax department told us in the month of February you are supposed to pay, and until the month of March we have not paid. So only 1 month, since 1 month we have not paid the same, then no reporting will come. If it is outstanding for greater than 6 months, only then a reporting will come. However, if it is disputed, we will always, that is, we will not wait for 6 months. We will always report, but we will report two things: the amount and the authority. Authority means at which forum we are under dispute, under which forum, at which level we are under dispute, we need to specify the same. So if there is a dispute, we will not wait for 6 months. We will always report, but we will report two things. One is the amount and one is the authority. What will we report? The amount as well as authority. Okay. So what did we see here? We saw clause 4, compliance of section 185 and 186. Then we saw public deposit, now which includes deemed deposits. Three things in case of public deposits: provisions, directives of RBI have been complied, provision of Companies Act have been complied, and orders of CLB and Tribunal have been complied with. Then clause 6, we saw whether the cost records are maintained as per section 148. Then statutory dues, which mentions it includes GST as well. We need to see whether it is disputed or undisputed. If it is undisputed and if it is outstanding for more than 6 months, then we need to report. If it is less than 6 months, no need to report the same. But in case of disputed, we will always report. That is, we will not wait for 6 months. But we need to report two things. One is the amount and the authority. That is the forum at which we are in dispute. Okay. So this was the statutory dues. Now, clause number 8. Very important clause, which is a new provision as per 2020. I think this is the best provision that they have come up with. Disclosure of transactions are not recorded. What are they talking about? Disclosure of transactions are not recorded. Whether there are any transaction not recorded in the books, have been surrendered or disclosed as income during tax assessment under Income Tax Act 1961. So we have not disclosed our income. But when we went for tax assessment, we disclosed our income or we surrendered. What? We disclosed or we surrendered. So for example, we had an income an undisclosed income, let's say of 25 lakh rupees. So we had not paid tax, we had not accounted in the books of accounts, but when the tax assessment was going on, we disclosed the same and we surrendered the same. Now if so, whether the previously unrecorded income have been properly recorded in the books of accounts during the year. So in case if you have disclosed any undisclosed income or surrendered, then we need to ensure whether that unrecorded income has also been accounted in the books of account during the current financial year. Okay, so this is the first time that they are talking about undisclosed income. CARO 16 never talked about undisclosed income. So if you now have undisclosed income as per the Income Tax Act, you need to verify whether the same have been accounted in the books of accounts during the year. Clause 9. Default and repayment of loans or other borrowings. This is altogether a new point. So initially we had talked about when we have granted loans and advances to others. Here in this point we are talking about repayment of loans and borrowings, that is we have borrowed money from others. So what are we supposed to report upon? Initially, firstly, if a default in repayment to any lender, if we have made a default in repayment to any lender, if yes, report the period and amount of default as per the prescribed format. What are we supposed to report? The period and the amount. For example, if I am supposed to pay, let's assume 50 lakh rupees and I have not paid it since last 1 year, we need to report the amount as well as the period in the prescribed format. So we have been given a prescribed format now. Firstly, we'll state nature of borrowing including debt securities. Which type of borrowing is it? Name of lender from whom we have borrowed. Amount not paid on due date, whether it is principal or interest, number of days delay or unpaid, and lastly remarks if any. So this is the prescribed format under which we are supposed to give the reporting. Secondly, whether the company has been declared a willful defaulter by bank or financial institution or the other lender. Who's a willful defaulter? Who has money and is unwilling to pay. For example, Vijay Mallya has been stated as a willful defaulter. So if you have money and if you are not paying, you will be called as a willful defaulter. So whether the company is declared willful defaulter by any bank or financial institution or other lender, we need to report. Whether the term loans were applied for the purpose for which the loans were obtained. So for example, I have obtained a loan saying I need to buy machinery. So I applied for a loan of let's say 4 crores stating I need to buy machinery. The same 4 crores I have not applied to buy machinery, I have invested into the stock market. I have invested into a property market. If so, I need to report the same. If not, whether the term loans were applied for the stated purpose. If it is applied, very good. But if it is not applied for the stated purpose, the amount is so diverted. So I need to specify the amount and purpose for which it was used. So for example, out of 4 crores which I had applied for machinery, let us assume 2 crores I diverted into stock market. So I need to state the amount, that is 2 crore, and also the purpose, that is stock market for which it is used. Moving ahead. Whether the funds were raised on a short-term basis have been utilized for long-term purpose. So for example, I obtained working capital loan, which is a short-term loan. Now I have utilized the same for buying a capital asset. So I have used it for long-term. So I need to see whether the short-term loans have been utilized for long-term purpose. And if yes, I need to specify the nature and amount. So if yes, the nature and amount to be indicated. Whether the funds are used to meet the obligation of its subsidiaries, joint venture and associates. That is, we are talking about group companies. Who are we talking about? Group companies. So have we obtained loans so we can fulfill the obligation of our group companies? If yes, details thereof with the nature of such transaction and amount in each case. So in case if such a transaction has happened where we have borrowed money, so we can repay the obligation of our group companies, that is subsidiary, joint ventures or associate, then we need to specify what was the type of transaction, what was the nature of the transaction, and also we need to report the amount in each case. Lastly, whether the company has raised loans on a pledge of securities held in its subsidiary, joint ventures or associate companies. So we have pledged securities which are owned not by us, which are owned by group companies. What? Which are owned by group companies. And if so, details thereof, and also report default if any. So if I need to report what default have I made along with the details thereof. Okay, so here also we in a way saw 6 points. We saw 6 points. Firstly, whether if we have made any default, if yes, we need to specify the amount and the period of default in the prescribed format. Whether the company is stated a willful defaulter. Whether the loan has been applied for stated purpose. If not, we need to specify the amount as well as the purpose for which it is deviated. If the short-term loans are applied for long-term, we need to report on the same. We need to specify the nature and the amount. Whether the funds are used to meet obligation of the group companies, that is subsidiaries, joint venture and associates. If yes, we need to specify the nature of such transaction and the amount in each case. And lastly, whether the company has obtained a loan by pledging the securities of group company. If so, again we need to specify the details thereof. Okay, so this was default in repayment of loans and other borrowings. Moving ahead, clause 10. Money raised by IPO, FPO, preferential allotment, private placement of shares or convertible debentures. I hope you all know IPO is initial public offer, further public offer. So in a way, we are raising money. What are we doing in this particular clause? We are raising money. So they need to know, we need to report upon two things. This is altogether a new point as per CARO 2020. There was no such provision in CARO 2016. So whether the money raised by IPO or FPO have been applied for the purpose for which they were raised. Likewise again, so for example, if we say we want to expand our centers, let us assume, for example, we are dealing with motors. For example, we are dealing with Kia Motors. Kia Motors has having its branch in Andhra Pradesh. They want to expand and they want to invest around 400 crores for expansion of that plant, so they can manufacture cars in India and service to the people. So they are raising that 400 crores so they could expand that plant in Andhra Pradesh. But however, out of that 400 crores, not all the money have been utilized for expansion of that particular plant. So somewhere we need to see whether the purpose for which the money is raised, whether the money is used for the same purpose. If not, details together with delays or default and subsequent rectification, if any, shall be reported. So in case of that 400 crores I have not utilized for a month or maybe for 4 months, I have utilized that money for something else. So there is a delay, or maybe there is a default. Out of 400 crores, let us assume 80 crores have been utilized for some other purpose. Or maybe later on I have rectified, 80 crores are utilized for some other purpose, but then I have withdrawn that money and put for the expansion of Andhra Pradesh plant. So in that particular scenario, we need to report all the three things, if there were any delay, default, or whether subsequent rectification. Secondly, we want to see whether the company has made any preferential allotment, private placement of shares or convertible debentures. If so, see this point, here we were talking about IPO and FPO, here we are talking about private placement, preferential allotment or convertible debenture. If so, whether section 42 and 62 of the Companies Act have been complied with. See, 42 talks about private placement and 62 talks about further capital, issue of further capital. So we need to ensure whether 42 and 62 have been complied with. And if not, provide details in respect of amount involved and a nature of non-compliance. So when we are making private placement, preferential allotment or convertible debentures, we need to verify whether section 42 and 62 are complied. If they are not complied, what are we supposed to do? We are supposed to disclose the amount and the nature of non-compliance. Okay, so this was money raised by IPO, FPO and preferential allotment, which was altogether a new provision. Let's go ahead. Your favorite, my friends, fraud. So in a case if the fraud is committed on the company or by the company, or whether the fraud is committed on the company or by the company, we need to report the same. The on the company or by the company reported during the year. If so, we need to specify the nature and amount of fraud. So which type of fraud is this? Whether it is misappropriation of assets, whether it is suppressing of expenses, whether it is inflating of incomes, what type of fraud is it, and also the amount of fraud. So in case of CARO 16, we used to talk only and only about this, but they have come up with an additional reporting whether 143.312 of the Companies Act have been complied with. I hope you all know 143.12. If the fraud is greater than 1 crore, we will go to audit committee. We will seek reply within 45 days. From the date of reply, we will go to the CG within 15 days. We will give ADT 4 along with the report, reply and comments. I hope you all know 143.12. So we need to ensure whether 143.12 have been complied with. Okay, so this is the new provision. There was no such provision in CARO 16. Lastly, whether the company has considered whistleblower complaints, if any, received during the year by the company. Whistleblowers are, people who might pass on the information. They are employees who might pass on the information about any wrongdoings happening in the company or by the company. So we as an auditor, we need to evaluate whether the whistleblower complaints, if any, received during the year. We need to consider all those complaints by the whistleblower, which may or may not be true. So this is all in regards to fraud. This is again a very new provision. Clause 12, Nidhi company. Now before we go ahead, let us understand what is a Nidhi company. The Nidhi company basically has its members. They will accept deposits from the members and they will grant these advances only to the members. It is kind of a mutual fund company where everyone contributes some money and whoever requires it is given as a loan. So that is a Nidhi company. So in a case of a Nidhi company, what are we supposed to do? We need to evaluate as auditors. We need to report whether the net own funds and deposit are at least in the ratio of 1:20. So for example, if they have deposits of 20 crores, they should have their own net fund of at least 1 crore. So in a lot of Nidhi companies, they have no net own funds, they only have deposits. No, they need to have their own funds as well, and then the deposits ratio should at least be 1:20. This is the same reporting which was there in CARO 2016 as well. There is no change so far. 10% of the unencumbered term deposits. So unencumbered means liquid deposits which can be easily converted into cash. So for example, if they have deposits of, let's say, 20 crores. Now if 20 crores are given as loans and advances to any member, and in any scenario, if the Nidhi company requires money, how is it going to get the money? So somewhere they say they should not give all the money. They should at least have 10% in liquid fund, that is unencumbered. So out of the total term deposit, they should have at least 10% in liquid. This is again the same provision as per CARO 16. Here comes a new point. Whether there have been any default in a payment of interest on deposit or principal. Whether there has been any default in payment of interest or principal. This is the new point, and if yes, we need to specify the details thereof. So if there is any default in repayment of interest or principal, we will specify the same along with the amount. Okay, this was all in regards to Nidhi company. A related party, clause 13, related party. See, we are not talking relative as per section 277. We are talking about related party. In a case of related party, it should be as per section 177, 188, and the disclosure should be as per AS 18. Sir, what do you mean by 177? Okay, let us see what is 177. If you remember audit committee, we are supposed to establish an audit committee. So as per Companies Act amended, power to audit committee to give omnibus approval for related party transaction on annual basis. So they are trying to say audit committee has a right to give approval to several related party transactions. So as we need to see whether it has been approved by the audit committee in section 177. 188, Prior approval of board of directors of the company is required to enter into any contract or arrangement with related party. So if you are entering into any contract with related party, section 188 requires prior approval of board of directors. So we need to evaluate whether 188 have been complied with. And AS 18 talks about related party disclosure. If we had any related party transaction, we need to disclose the same as per AS 18. So in clause 13, our only responsibility is to see whether it is as per 177, that is audit committee has given its approval. Then 188, that is board of directors also given its approval. And lastly, disclosure as per AS 18. This was the same point as per CARO 16, no changes in provision. Clause 14, internal audit system. Altogether a new provision. There was no mention about internal audit system in CARO 2016. We need to comment whether the company has internal audit system commensurate with the size and nature of its business. So we need to evaluate whether the company has adequate internal audit system considering the size and nature of the entity. In a case whether the reports of internal auditor were considered by statutory auditor. So wherever internal auditor has issued any report, we as statutory auditor, whether we have gone through the reports of internal auditor or no. So in case of internal audit, we need to check two things. Firstly, whether the internal audit system is commensurate with the size and nature, and whether we have considered the report of the internal auditor. See, a lot of students are not really aware about internal audit is applicable to whom. See, we have section 138. So let us just go through section 138 so you come to know audit is applicable. Internal audit is applicable to which entities. See, this point will not be applicable to entities where internal audit is not applicable. So prerequisite is internal audit should be applicable to you. Only if internal audit is applicable to you, then this particular clause will be applicable. So let us see what internal audit is applicable to which companies. As per section 138 of the Companies Act, it is applicable to all the listed companies. Then in case of public company, it is applicable if paid up share capital is 50 crore or more, or a turnover is 200 crore or more, or a borrowing is 100 crore or more. See, these are or condition. When we were talking about applicability of CARO in private limited company, we were talking about and conditions which need to be fulfilled cumulatively. Here we are talking about or conditions. If any one of the following is hit, then we will have to make, then internal audit will be applicable. So paid up share capital in public limited 50 crores or more, turnover 200 crores or more, or borrowings 100 crores or more. In case if we are a private limited company, turnover will be 200 crores or more, or borrowing will be 100 crores or more. They are not specified anything about paid up share capital in case of a private limited company. So in this scenarios, internal audit will be applicable, and only if internal audit is applicable, somewhere clause number 14 will come into play. Okay, that was clause 14, internal audit. Non-cash transaction, clause 15, non-cash transaction with directors or persons connected with him. What? With directors or persons connected with him. If so, whether the provision of section 192 of the Companies Act have been complied with. It talks about any non-cash transaction with the directors or other parties. So in case if there is any non-cash transactions, we need to verify whether section 192 of the Companies Act have been complied with. So 192, prior approval for such arrangement is accorded by a resolution by the company in general meeting. So in case if we are going to enter into any non-cash transaction, prior approval is required at the general meeting. See, wherever you see this, a lot of these things are OFU, only for understanding. I just want you to have, some knowledge of what 192 is. In a CARO, they are not going to ask you so much in detail, specifying the case of 192. It is only for you to understand what does 192 talk about. Okay, so it talks about prior approval of such arrangement by a resolution of the company in the general meeting. So that was clause 15, non-cash transaction. Clause 16, section 45 IA of the RBI Act. Now 45 IA is applicable to which companies? To NBFCs. Section 45I is applicable to which companies? To NBFCs. So in this particular clause, we need to report whether the company is required to be registered under 45IA. Who is required to be registered? NBFC. Please note this. So when you read the bare provisions of CARO, nowhere this is specified. So student is always left with a doubt. 145IA, who is supposed to be registered under 45IA? NBFCs are to be registered. If so, whether the registration has been obtained. So in case if you are supposed to be registered under 45, that is in case if you are an NBFC, whether you have obtained such a registration. Whether the company has conducted any non-banking financial or housing finance activities without a valid certificate. So in case I need to be registered under 45IA, I have not obtained such a registration, but still I have entered into non-banking financial or housing finance. So in case if so, I need to report that I have entered, the company has entered into such a transaction without holding a valid certificate. So this was a new point as per CARO 2020. Whether the company is a core investment company as defined by RBI. We will see what is a core investment company, but we need to verify whether the company is a core investment company. Again, this is a new provision as per 2020. If so, whether it continues to fulfill the criteria, and if exempted, it continues to fulfill such criteria. So in case we need to verify whether we are a CIC, core investment company. If yes, we need to see whether we are still meeting core investment criterias, and in case if we are exempted, that is we are not CIC, then we need to evaluate whether we are still exempted. Okay, so this particular thing was talking about CIC. We will see what is CIC, but before that let us take clause D. Whether the company group has more than one CIC. What does group mean? Subsidiary, joint ventures, associate. So whether the company group has more than one CIC. If yes, indicate the number of CIC which are part of the group. So we will have to state how many CICs do we have. But still, sir, we have a question ahead. What is a CIC? So let's take that. A core investment company is a non-banking financial company. That is, it is a NBFC carrying business of acquisition of shares and securities, provided holds not less than 90% of its net assets in the form of investment in equity shares, preference shares, bond, debentures, debts or loan. So 90% of the net assets are invested into shares, debentures and things like that. Its investment in equity share in group company constitute not less than 60%. So out of the investment in shares, 60% are in the group company. Yeah, 60% are in the group company of its net asset on the date of the last audited balance sheet. If these two criteria are fulfilled, you will call it as a core investment company. See, you're not supposed to recite this. This is again an OFU, so you'll understand what is a core investment company. Clause 17, cash losses. So this is again a new clause, 2020. Cash losses, whether the company has incurred cash losses in the financial year and immediately preceding financial year. Whether we have incurred cash losses. See, we are not talking about net loss, we are talking about cash loss. So we need to eliminate non-cash expenses such as depreciation and everything. We just need to evaluate whether we have incurred cash loss. So somewhere it is affecting our liquidity and everything, so we need to report whether cash losses are incurred. If so, the amount of the cash losses. Okay, so in this particular clause we need to see whether we have incurred cash losses in this year or the immediately preceding financial year, and if so, state the amount of such cash losses. Clause 18, resignation of statutory auditor. Again a new point of CARO 2020. There was no such provision in CARO 2016. Whether there has been any resignation of statutory auditors during the year. Okay, whether there has been any resignation of statutory auditor during the year. And if so, whether the auditor has taken into consideration the issues, objections, concerns raised by the outgoing auditor. So for example, X was the auditor. Mr. X was the auditor. Mr. X resigned and in his place Mr. Y has appointed. So now we are Mr. Y. So now we need to ensure what were the considerations of Mr. X, what were the issues, What were the objection and what were the concerns? We are asking the outgoing auditor, why did you leave? Did we do so? So somewhere this clause was required in professional ethics, which CA final students are aware about. Inter students, you do not have this in your syllabus. In professional ethics, we already have a provision where we need to communicate with the predecessor auditor. That is the auditor who's leaving and whose place we are taking. So we any which ways need to communicate with the predecessor auditor. But now CARO is also specifying the same, in case if there is a resignation during the year. This is only in case there is a resignation. Professional ethics talks about even if there is no resignation, predecessor auditor, that is auditor for the previous financial year, also you need to communicate. But here in CARO, you need to communicate with the previous auditor, that is the outgoing auditor, only if there is a resignation, and we need to ask him what was his objection, what were his concerns, and only then proceed with the audit. There might be a scenario, there was a restriction on scope of audit. What was there? A restriction on scope of audit. Because of restriction on scope of audit, the auditor resigned. The auditor resigned. He withdrew from the engagement. So if there was a restriction on scope of audit imposed by the management, I shall also not accept the audit. Hence, in CARO, we need to report whether we have considered all this thing in case of resignation of an auditor. That is clause number 18. Clause 19, capability of company meeting its liability existing at the balance sheet date. Here we are talking about liquidity. What are we talking about? Liquidity. Whether we will be able to meet the obligation as of the balance sheet date. So this is again a new point as per CARO 2020. So on the balance sheet, on the basis of what? Financial ratios, aging. That is, since how long we have not paid to the creditors, expected dates of realization of financial assets and a payment of financial liabilities. That is based on the ratios or aging, and when assets are going to be realized and when I am supposed to pay the liabilities. I think so entity will not be able to repay it, or other information, or the auditor's knowledge of board or management's plans. So I have some other information on the basis of which I think entity will not be able to repay its liability, or I am aware about management or board of directors plan which somewhere indicates they won't be able to repay of the liabilities. Whether the auditor is of the opinion that no material uncertainty exists on the date of the audit report that company is capable of meeting of its liability. So do I have material uncertainty that company will not be able to pay its liability on the date of the audit report? And if so, when they fall due within a period of 1 year from the date of balance sheet. So here what we are trying to say is that we, on the basis of financial ratios or aging or other information or knowledge of board's plan or anything, we have material certainty. What do we have? Material certainty that we are very sure that the entity will not be able to repay its liability, not just on the date of auditor's report, but also from 1 year from the date of the financial statements, or from the date of the balance sheet. We need to report on the same. So somewhere we are reporting on what? Liquidity. So users come to know whether the company will continue as a going concern. See, any which ways we report on all this under SA 570. But 570 going concern assumption is primarily of the management. They make an assessment of going concern, we just evaluate. But here we are supposed to report on the same. What we are supposed to report on the same, whether the company will be able to meet its liability or not. Very, very important point, my friends. It can be very important from the exam point of view as well. Moving ahead, clause 20, transfer amount remaining unspent under section 135(5) to the fund specified in schedule 7. Before we go ahead, let us at least understand what do we mean by amount remaining unspent under 135(5). The board of company shall ensure that company spends in every financial year at least 2% of the average net profit made during the preceding 3 financial years in pursuance of CSR, that is corporate social responsibility policy. So what we are trying to say, 135(5) says that whatever profits we have made out of the average profit of the last 3 financial year, we need to spend at least 2% in corporate social responsibility. At least 2% in corporate social responsibility. In a case if we have not spent, matlab we can spend this in activities specified in schedule 7. The activities specified in schedule 7 are activities which are permitted in which we can do CSR. In fact, COVID-19 has been added to this. So in case if you are spending money for corona pandemic, it is a eligible project. So schedule 7 specifies activities which may be included by the company in their CSR policy. So in case if any money is pending in 135.5, we need to transfer to a fund specified in in schedule 7. So here what do we say? Whether in respect of other than our ongoing projects, the company has transferred unspent amount to fund specified in schedule 7 to the Companies Act within a period of 6 months of the expiry of the financial year. So in case if we are unable to spend that 2% in this financial year, we need to transfer that in a fund specified in schedule 7 in how much time? Within 6 months from the end of the financial statement. Whether any amount unspent pursuant to ongoing project has been transferred to the special account. So not just that, we need to transfer this amount into a special account if it has not been spent in the specified financial year. Okay, so this was amount remaining unspent under section 135. So what we are trying to say, 135 relates to CSR. So we need to spend 2% of our 3 years average profits. In case if we are not unable to do that, we need to transfer that to the fund specified in schedule 7. And also not just that, we need to transfer that remaining unspent amount to a special account. Going ahead, last clause, reporting on consolidated financial statement. We had already covered this while we were talking about applicability and exclusions. We said usually consolidated financial statement, we did not read a consolidated CARO. But however, in a case if there is a adverse or qualified remark in a subsidiary's CARO, we need to indicate the same in the holding company's CARO as well. So again, this is a new provision. Whether there has been any qualification or adverse remark by respective auditor in CARO of companies included in CFS, which are included in CFS, associates or subsidiaries. If yes, indicate the companies and the paragraph number of the CARO reporting containing qualification or adverse remarks. So in holding companies CARO, we will make a clear mention of paragraph number of CARO of subsidiary or where there has been a qualification or an adverse remark. What are an adverse remark? So basically there was no requirement for consolidated CARO, but now in case if there is a misstatement in subsidiaries CARO, if there is a adverse or qualified remark, then we need to indicate the same in the holding company's CARO. So with this we are done with all the 21 points of CARO. To conclude, if we see what are the differences between and CARO, by the change in the reporting requirement clearly shows that expectation from the auditors are increasing significantly. There are a lot of minute points on which they require our reporting. More emphasis is added on utilization of funds. They have specified whether short term is used for short term and not long term, for the purpose for which they have been used. If it is not used for the stated purpose, then also we need to report. Financial stability, that is whether we are able to repay, whether there are any cash losses during the preceding financial year or the current financial year. So there is a lot of emphasis on utilization fund, on financial stability. Now auditors need to be more conscious, skeptical and accurate while discharging his or her duties, since the reporting requirements have increased considerably. So with this we are done with CARO 2020. Any doubts, my friend? If yes, please note down the same and you can cover the same during a audit helpline session, in a Zoom session, or jot down the same when we have live lectures, face-to-face lectures. We will try to solve the same, but please jot it down very well. Thank you.